Hi, this is Guy on the morning of the 23rd of May 2014. We had a big day yesterday. We have finished what's called debugging. Debugging is basically where different programmers who are coding things up in different languages finally come to an agreement on everything, and everything they do matches up. That means that the Copilot version 2 is ready to go. So again, next few days I will be talking more about that. Quite a few things to talk about in general, but long process these things if you want to do them properly. Now, yesterday I talked a bit about signs of life in the market. I don't want to macro-manage this, or sorry, I don't want to micromanage this, but there do appear to be certain signs of potential signs of life, if you want to put it that way. And the S&P is creeping up a little bit more yesterday, albeit on quite low volume. No great shakes with the volume, but OVI is still just keeping its head above water and staying there for the time being. We'll just have a quick look at the Nasdaq. Just a quick confirmation of that one. Again, the same kind of thing there, emerging from its little range. Not great volume, but again, it's starting to creep up a little bit again, and just getting above this previous little shoulder of the Head and Shoulders as well, just creeping above that, closing right on it, where we were hitting a high in late January. And the last one we'll look at is the Dow, just very quickly in terms of the indices. Not quite so creeping up to new highs, but again, just a tiny bit up yesterday. But OVI still staying above water. So again, these are little signs of life. They're not major, I'm not saying. I just want to cover a couple of other stocks that I mentioned yesterday. One was Netflix. And again, that's crept up a bit more. The only problem being, though, we have a bit of a doji there happening yesterday. And dojis do tend to work pretty well with Netflix. If you look at this one here, look at this one here, look at this one here. So I'd be cautious on Netflix, at least in the very short term. And the other one I want to mention from yesterday is Verizon. And Verizon is certainly looking more like a consolidation play. Good, lovely OVI there, and it's literally looking to creep out of this little consolidation pattern. Not the prettiest one we've ever seen, but not bad either. Now, I want to talk today about something a little different. It's a pattern that I have grown to love over the years, and it's one that I will be making very easy for you in the coming months. Now, during earnings, it's often a time where we don't do an awful lot, especially prior to an announcement for a particular stock, unless you're going to do what's called a straddle. I will be talking about that again in the next few months, because I have a way of doing that that's been very successful over the years as well. But this particular pattern I want to talk about is what's called the post-earnings gap. It's when a stock has an earnings report, it gaps up, and then forms a consolidation. Now, I'm sure if you were to put up your hand or vote on this, you would love to get those stocks, because it's very difficult to manually go through all the stocks that are reporting earnings on a particular day and see which ones have gapped up, and then see which ones have formed a flag after that particular point in time. So it's a very good pattern. I mean, it's a very reliable pattern. It's an excellent pattern, because what's happened is at earnings, the stock has jumped up through making a good surprise, then it's consolidated, and if you have the OVI in favor as well, then you have a very, very good chance of this pattern actually going to make good profits. We have some stats coming out on OVI because of all the work we've done very soon, but I'll just give you one particular stat at the moment, and that is that when a stock is forming our kind of OVI pattern, which I'll explain to you in the next few days, that 70% of the time, or sorry, about 70 to 75% of the time, it is also forming my style of bull flag as well. Now that's an incredible statistic, because it means that there is a definite link between chart setup in terms of the stock price and the options transactions as well, as defined specifically by the OVI. So these are very interesting stats, and I will be talking more about them moving forward. It's nothing quite like having a strategy that you know through independent analysis actually has legs, actually works. And I think we're the only people in the retail space to be doing this kind of work, as in having institutions come in and test what we do and analyze our analytics and then even potentially help us with our analytics. This is something that, again, I think is unique in the industry. And I think it's one of those things that once you know in-house that you've got something a little bit special, then you don't mind opening it up to other people in the industry who are, more institutionally minded, because at least you're not going to get humiliated. So we were on pretty safe territory in that sense. But anyway, that's more to discuss in the next few days and next week or two. Now, I just want to show you a couple of patterns that I'd love to see. Now, these are post-earnings because we've just had earnings season, but they're not exactly what I was looking for. But I do want to show you the kind of things that I like and the kind of things that I'm going to be adding to our filters, particularly on Flag Trader. And I think this is going to make Flag Trader very, very attractive, even more attractive than it already is. Now, what you've got here is a gap up. This is DDS. Now, the OVI, unfortunately, is not massively brilliant on this particular stock, but just look at the pattern. We've got the gap up here. That's happened on May the 16th, and then we've got the flag here. Lovely pattern, so worth just keeping an eye on that one. Let's now go to RAX. I'm going to show you that one too. I showed these to one of our clients yesterday, Mr. Angry, and he was very angry I didn't show them to them before the open, so he's very vocal, Mr. Angry. Here's another one. This isn't quite so good in terms of the pattern because it is in the context of what's been a downtrend, but again, you see the pattern clearly. It's a gap up and then a consolidation. So this is the kind of thing we like to see, but I'd rather this was more in the context of a rising situation. I've got a few others for you, some good and some not so good. This is the India index, and you've got, this isn't an earnings play per se, because it's like an index of, an India fund. But you've got the gap up and the consolidation. You've got another gap up and another consolidation. So you see how that works. Then we've got PPO. Let's just look at that one. PPO is a nice one. OVI is behaving itself very well. Good positive OVI. Broke out of this range very nicely, albeit you had a bit of a wobble right here back on April the 9th. But anyway, since then, gapped up, now formed a consolidation. So it'd be interesting to see how that goes. And then there's PTX I want to show you as well. Not quite so pretty, and in this one the OVI is actually negative, so this one you would be hesitant on, but can't argue with the pattern. I mean, we had a gap up, not the greatest actually, and then the consolidation. So it's mathematically qualified because of the way that the bars have set up. But if you look at it, you're thinking, well, you know what, this is a bit, this is not ideal from the options point of view. Now, it looks like this might have new options, this particular stock. There's not particularly any activity. If you look at the OVI here, it's flat. You can't read that. So I would ignore the OVI on this particular one. So it's just popped up because it did have a gap up and a subsequent consolidation. And then there's STKL as well. There are a couple of others, but there are a couple of others out there, but they're quite ugly. But here's STKL. That's when it was found like that, and it's starting to pop out right now as well, with an OVI that is passable, and not ideal, but passable. So this is a pattern that we are looking at more seriously. It's part of the flag pattern anyway. It's part of the flag pattern family, but but I want to look at it with specific reference to post earnings, because if you do get an earnings report and a gap up after earnings report and then a consolidation, you have a very powerful combination set up there. So I will be helping you with that in the coming weeks as we deploy an awful lot more stuff. We are emerging from a huge period now of redeveloping a lot of our tools and things to make life easier for us, and it's been a very long process simply because we had outside institutional analysts to help us with it, or at least to make sure we were doing things in the right way from an institutional point of view. We think that's the best way to go forward, and it's the most robust way to actually analyze and create tools that we can use ongoing. And ultimately, these are tools that I want to use. So I'm pretty specific about what I want. I like to trade breakouts from well-defined consolidations where the OVI is in our favor and has statistically been proved to actually yield profitable trades over a period of time. So nothing happens without the statistics being in our favor. That's the way that I want to trade. I don't want to, I used to be very cavalier with all this stuff and just, throw the money on, and I did very well, but it's not really a great way to go forward. You really need to know what your stats are and what your probabilities are, and to know that the mathematical and statistical methodology that you're using is robust. So all this has been happening, and I am very excited to say that all this will be available to you imminently now. So it's been a long old process. In with all that, obviously you know that there's something else I trade as well, and that's well-defined reversal patterns as well. So we obviously will continue with those as well. But it's well-defined reversals as expressed by very prominent doji reversals or railroad tracks, and then it's the continuation patterns with the OVI and breaks of support or resistance. So that's pretty much all we do, and there are just several ways of doing it. You can do it with stocks, you can do it with options, and if you want to be a bit more exotic, you can do it with combinations of option strategies, and you can do it with CFDs if you're in the UK as well, or spread betting too. So there's a few ways to do effectively the same strategy, and again, we'll be very active in the coming weeks and months on showing you exactly how you do these things with the stats on your side. And that's the key part of this. Not just any old stats, but independently validated stats as well. So that's it for today. I will see you very soon, and look forward to it.